The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. It's going to be a big week this week, I believe, just like last week was a big week, but which direction remains to be seen. I posted the chart of the DAX today, folks. The UK is closed. It's a banking holiday over there, so they'll be back in business tomorrow. As you can see on this pattern that we have here in the DAX is a Gartley pattern. It's actually a perfect one. You can see a beautiful ABCD and a nice retracement and everything. It's already moved in the direction of what you would have probably bought it at, but that's neither here nor there. Let's move on to a couple of things that are important. This is a very important day historically, folks. I don't know if you folks remember, but on August 31st, I think it was many years ago, 20 years ago or so, Princess Di took that fatal ride through the tunnel and was killed. But the thing that was most important was the fact that our friend Arch Crawford over here in Tucson, Arizona, had in his letter a big blurb about that August 31st being a sign of unrequited love and fatality or danger, something like that. But boy, he had it spot on. And we'll have Arch on Thursday. He'll be our guest, and we'll discuss that a little bit along with some of the other things that he's looking at. So that was an interesting one to look at. Also, August 31st, 39 years ago, I had my very first student, Jocelyn Calkins. She was a wife of a he's a radiologist down in Texas, Lubbock, Texas, home of Mac Davis and a whole bunch of other cool people. But anyway, Jocelyn came and spent 5 days with me, and she was with me from 5 in the morning till 8 in the evening, believe it or not, 5 days in a row. And what happened was she had called the Chicago Mercantile Exchange looking for someone to teach her. The Mercantile Exchange called Ed Dobson at Traders Press. Ed Dobson called me. And then her husband called me, Ian called me, and he said, will you take my wife as a student? She's a real estate agent, and she wants to learn to trade. And I said, I really don't do that. And he said, I'll pay you $5,000 for the week. And I said, I just started doing that. So she was my very first student and my most expensive. I never charged that much anymore. So, but that was, and she went back and I taught both of her boys. And then as far as I know, they're still trading. It's just a few years ago, I checked in with them, and they were still, the parents had passed away. But that's it. Okay, folks. One thing that I think is very important today, if you'll take a look at the newsletter that I wrote, I didn't write it. John Jameson wrote it. John has been a friend of mine since we became friends 18 years ago when he lived in Australia. He came over here to train with me, and he ended up spending a couple of weeks. He is one of the smartest people I've been around, hands down, and he's an incredible writer. But if you'll read that newsletter, if you want a copy of it, all you have to do is drop me an email, larrypesavento@gmail.com, and I'll send it out to you. But if you ever wonder why these stocks are doing what they're doing, it's really quite amazing. People think that Amazon is a bookseller, and they think that Tesla is an automobile company, and Google is a search engine type stuff. None of that stuff is true, folks. Even Microsoft, all their money in Amazon, 77% of their income comes from their cloud business. And that's where it all is. It's all based on data. They're pulling Facebook, same thing. They're pulling data. They're selling data. Data is the most valuable commodity on earth, more than oil, more than gold, more than bonds, more than anything. So they're pumping the data, and that's where the whole thing comes from. And it's all part of this new internet that's coming past 5G. And it'll be something that'll be, really spectacular, but it's going to be about mining data, and so they can follow everything that you're doing, just like the book 1984. So remind yourself, take a look at that. It's got some interesting things in it. One of the things that we did in the newsletter, if you'll notice here, we'll get this up here. We posted this in the letter last night or on Sunday, and you'll be able to get this up here. You'll see that we are expecting the high to be at 12,088. That's the 1.618 expansion. Last night, the high in the NASDAQ was 12,091, so it missed it by 3 points. Well, I guess we'll have to get back to using those moving averages then, since that didn't work too well, missed it by 3 points. Now, whether that means anything or not, I don't know, but the last time we hit one of those, we had a 300-point drop in the NASDAQ. Now, Leon Cooperman was just on CNBC from his estate down in Florida, and he said that he thought the market was rather risky. Well, everybody thinks the market's rather risky, and you don't know whether it's going here or there or where. But all I know is that we're very overbought, but we could stay overbought for weeks and weeks and weeks like we've done. Folks, I never thought in a million years that when on March 23rd, when we made that big ABCD at the bottom, that we were going to make new highs. I had no clue of that. And remember, when these things go up, when you see the NASDAQ go up, you're basically looking at 8 stocks, the FANG stocks plus, Microsoft and a few others, Tesla as being one of them. And Tesla is not an automobile company, folks. Tesla is a data company. Do you know that Elon Musk has the rights to send up 30,000 satellites that he's going to set up for building what is the structure for the new internet that's coming? And so you got to. That's why it is. I mean, it's trading at 1,100 times earnings. It's not because it's a car company, folks. You have to stop and think, why are people paying that kind of price for a car company? It's not a car company. It's a data collection company, and that's really what they're doing. So that's why from what John tells me, this is why these things are priced the way they are. I know so little about stocks, but he's a pretty smart dude and he reads incessantly. So he really has a grasp on what's going on here. So we'll keep an eye on that. That's why we do watch a few of these companies that are doing cryptocurrencies, because that's going to be the future too, is this broadband stuff that's going to be coming out, and it'll be very, very interesting to see how that unfolds through this time period. Also, what's going on in the grain markets? Mr. Z was chatting this morning here in the TFNN Den about and so was Basil, the fact that the weather has turned hot and dry across the Midwest, and beans are up 15 cents, are breaking out above a very, very important number. I want to give you, just to show you where we were in the soybeans here coming in tonight. I mean, this is really one of those times where you'll get this up here, you'll be able to see it. You'll see that 786 level right there, that big ABCD. That reminds me of 1988 when I was doing my Astro Cycles newsletter and hotline, and it was a day like this. And I said, if beans is closed near the high of the day, don't expect them to open lower. And the reason why is they would be, bumping above that 78% level and off to the races. And we're up about 16 cents right now from that level. So that's very important. Now, where they're going to go from here is anybody's guess, but they're in a heck of a move, and it could stop at any time. So use a trailing stop. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I posted the chart of natural gas, and this thing has moved a lot. Mr. Z began buying this, I believe, around 152, 155, I believe, and we started to, follow it to the upside. You'll notice that we've made a 3-drive pattern now since August. When we started at 225, we had the pullback, and then we had the other pullback at the 382. Then we had the run up on Friday up to 275. The target we were looking for was 271, and I believe we're trading around 260 and change this morning. So we're watching for another pullback here, A, B, C, D type format to possibly, buy the natural gas again, because this looks like it's a really serious move to the upside. Remember what the Federal Reserve did this past week is they basically pulled out all the stops and said, no matter what happens, we're going to liquefy this market. Where this money is going to go is anybody's guess. Right now, it's not going in Treasury bonds. Treasury bonds still look weak, but they are at a very, very critical level. We'll get this up here so you folks can take a quick look at it. We talked about it last week, of course, several different times, and we want to remind ourselves that this is a very, very important time frame in the Treasury bonds. And as soon as I can get the chart up, which is right here, you'll be able to see that we are now, this is a switchover now between the December and September. So we're watching December bonds now, and you want to watch December bonds around the 174 level, around 174.22 right now, but around 174, they're going to complete that ABCD. It's going to be exact 78% level, and you'll see that the 78% level since the March 23rd low has held up extremely well. And so this is going to be incredible support here, because if it can come out of here with a lot of gusto, and I mean, like it did way back in February, if it can do that, then, we're going to be looking at interest rates heading a whole lot lower is what the Fed wants. But the Fed is pumping so much money into this thing that it's going to be difficult, I believe, for them to do that, because that's going to be affecting the dollar. Now, let's look at the dollar, because we're very, very close to the big number in the U.S. dollar. Let's get this up here. You'll see the number that we're watching here is a 78% retracement. You can see the 61% retracement coming in March, okay, and that is equivalent to a 78% retracement of the whole move up at the double top, and then the pullback. You'll see the first 61% retracement held spot on, and the market rallied from 94 up to 101, and then it's come down dramatically here, and if we get below that 92 level, the first stop is going to be 91.63, and if we go smashing below that, and that would mean the euro way above 120, then there's something really serious wrong, and then they're going to be seeing what's going on. Duffy has made a comment about the way these firms work is they sell information, and that's exactly what they do. That's why when you click on something and you want to buy a shirt, you get 5 different ads for a shirt, coming through your email automatically. And that's where all this stuff is coming from. Plus everything. They're going to have and not only that, what they want to do is they have this COV-19 that's out there. That means Certificate of Vaccination. That's what they want to do, is they want to put something in your bloodstream so they can track you all the time, knowing where you are, what you're doing, and what's happening in your whole life. So this is something that is going to be really cool unfolding over here the next few years. So we'll watch it. We'll watch it closely, of course. But that's neither here nor there, because we're technicians. We try to find the ones that look the most interesting. What does that mean, Mike? Not cool. Did something wrong? Well, that's okay. I do a lot of things wrong, but I don't believe they're not going to vaccinate me that way. I'm not. There's just no way I'm not going to let that happen, because I've watched too many movies like Soylent Green and some of the other things to, keep going on. Okay, yes, the dollar. If the dollar breaks down that low, will gold spike up? Now, the gold we need to get a close above $2,000 an ounce in the gold for it to get moving pretty good, because it's still in an area, where we could have a retracement, and frankly, if we get that retracement in the gold, I think that would be an ideal situation, to look at that, because basically what we have now in the gold is basically a 135 pattern in the 4-hour chart, and we need to get it. We need it to get above $2,000 back. Okay, someone's asking. Oh, Mr. Z is asking where that number comes from in the NASDAQ, and if you'll bear with me here 1 second, I'll get it up here without too much trouble, and we'll get this up here, and you'll be able to see it here. Okay, Mr. Z, there it is right there. And if you'll notice here, it's the expansion, Mr. Z, from the high. In fact, it's off the side of this chart. But if you'll notice, I'll just leave the chart there, buddy. If you want me to, I will send you a copy of it, and you can do the work yourself to see what it is. Basically, it's a 1.618 expansion of that move that we had for the down move into when we got down to 10,090, and then the 1.618 expansion of that takes it up here. This is done automatically by Ensign for me, but you can see it. Real simple, Mr. Z. If you look at the double top on the far left, back in July, that's the first calculation that you have here. Okay, and then the second one is the double top right here, and then you have the third double top right there, and that third double top is the one that takes you to the second one, and then the third one is up there at 12,091. So I'll send it on to you. You can check it out. It's also, the more important than that of those swings, if you read the letter, it's exactly one standard deviation for the week. In other words, that should have been the high of the week based on that. And the odds of that being the high of the week were better than 3-to-1. So that was a really high probability it was going to make that. Now, whether it gets above it or not, it goes above it all the time. So that's a really important number to watch. That's the same number that we have in the S&P is at 30. It was at 30.20 and 35.20 in the S&P, and we got to 35.24 opening Sunday night. So that's why those numbers are so important. I hope that helps. You'll be able to see that, where you can, hey, Mr. Z, if you're asking the question, I can promise you there were a lot of people out there that are asking that same question. So that's where it goes. If you're going to sell anything, folks, in the stocks, if you're going to sell anything, sell the one that looks bearish. And the only one up here of all these indices that looks bearish is the Russell. You'll notice the Russell couldn't even make highs from 2 weeks ago. Okay, we made a little retracement And, that's the weak one. So you want to sell the weakest if you're going to sell something. Hey, I wouldn't sell, I would sell Apple and Tesla in a heartbeat because they're split now and you're going to get more people coming in. But you got to do it on a short-term basis. Just do a half-hour chart on those and watch some beautiful patterns. And they're there all the time. I mean, they pop up all the time. So just look at that 30-minute chart. And you can trade that. I mean, Tesla's not trading at 2,300 anymore. It's at 400 and change, and Apple's at 125. So that's what it does. It brings in liquidity. When you split a stock, all it does is increase the liquidity. It doesn't do anything that doesn't add value. So that's why it's better. Let's take a break. 877-927-6648. Stay tuned for Rich Anderson.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, dear. Oh, my gosh. Okay, we're back. I hope we have Rich Anderson on the line. Rich, are you there?
You bet. Good morning,
Hey,
Larry.
Rick.
How are you?
I'm good, my friend. Tell us how things in Minneapolis, have they cooled off a bit?
Yeah, they've cooled off a bit, but there's other parts of the country are still, I mean, when you've got Joe Scarborough on Good Morning Joe saying that, Portland, the mayor, and the governor have to stop this. 90 days of riots in a row. I mean, or calling the National Guard. Clearly, we have some people in positions of power, in governors and mayors, that aren't doing their job, and they're letting down all the citizens. It's they just want to be virtue signalers, but the whole country was developed on rule of law, rule of property. Things are falling apart. They're falling apart.
Yeah.
The mood has changed. The mood has changed at the Board of Trade, though, as you can see from the openings this morning.
Sure.
A few weeks ago, they were wondering when the Chinese were going to buy. Now they're wondering when they're going to stop. There's a big scramble in the cash market. Last time I was on, I talked about how the basis had become the ruler, and it's very profitable in shipments in the Gulf for corn and beans. So there's no room for the wheat, and you can see why. The last time I was on, they asked a question about open interest. I think the real key is commitment of traders report. And if you look at the commitment of traders report in the last 3 weeks, the commercials have bought almost 114,000 contracts of corn, and that's a smart money. And they're the least short corn since January of 28th of this year. Yeah. And that's like playing poker with a mark deck. I know you know about playing poker, but in order for them to take a position, they have to go into the market, and that is what they've been doing because they've got to get coverage. The flip side of that, the total commercial short position has stayed steady, and that's a sign that the farmers haven't been selling. But we have the biggest drought we've had in 7 years in Iowa, and soybeans are an August crop. You got to get the rain in August to fill those beans, and that's been a problem.
Hey, Rich, can you explain to the folks what the basis means? Because I know there's a lot of folks here that are not grain traders, so explain to them why the basis is important.
Well, that's how the commercials, everybody talks about futures being a zero-sum game. For every buyer, there's a seller, and one's a winner and one's a loser. But part of that is the commercials are buying grain. I've sold something to China. I haven't covered it in the cash market, so I buy it in the futures. Well, the real key is how much do I have to pay for that cash? They were able to buy stuff way under the futures market, and now the way under is, which normally as we're getting close to harvest, I mean, we should be at our lowest time of the year for cash, should be the cheapest versus the futures market. But because all this buying's coming in and everybody wants to secure their supply, the cash market has actually been rising versus the board. And in the summertime, typically, it'll often go premium the board because there's so little cash moving. The most cash is a truism that most cash moves at harvest. It just does because there's never enough storage that to store everything you harvest. But this is an unusual year because of a lot of things. But right now it's because of Chinese buying in the grain.
Okay. Rich, I have a question. From Minnesota, how is the people there? How do they react to the COV virus? I mean, I know you and Lisa have been pretty much watching social distancing really closely, but are the rest of the folks there doing the same thing? And
I talked to a friend of mine last week, and he'd been up to Brainerd, which is maybe 80 miles north. You get out of the cities, and you hardly see masks. Out in South Dakota, you don't see masks. I mean, they had the state fair. Minnesota canceled the state fair. South Dakota had the state fair, but as a consequence, they're having more disease, and it's percent per population. That's the key thing, and masks are not a bad idea. They aren't the end all, but they're I believe in them, and particularly if you're over X age. Basically, what the CDC, Scott Gottlieb say, if you're above a certain age or if you're in a risk category, you need to take precautions. Your masks are as good as anything.
Wow. Be careful about talking about age, buddy. It's creeping up on you, pal.
I know it. Believe me, I'm above 60, so generally anybody above 60 is in a higher risk category. It really is hard on the 80 and above.
Yeah. Whoa, easy. Whoa, slow down there, partner. Hey, listen, folks, Rich and I have been talking at least once a day, every day. That's almost 7 days a week since 1975. So it's been a long run here. We've seen just about everything in these markets with the exception of a pandemic. So that's going to be an interesting one to write into the history book. So we'll watch it. What about are we going to see big increases in the price of, beef and stuff? We've already seen some of it's about 30% higher here in Tucson already, but are more price increases coming in the meats?
Well, we've got actually, we've got an increase in hog production. The hog report's on September 24th, and I think it'll show less of an increase in production than the June report did. But there's plenty of cattle and hogs being produced in this country. The only time you have shortages is when you have disease problems at the processing plant, and they seem to have gotten a handle on that. So I don't think so, but I do think. As I said last time I was on your show, they're going to allow for inflation to get rid of this $3 trillion of extra spending, or who knows what they do in Washington. Maybe it'll be $4 or $5 trillion in the next 2 to 3 years to get rid of this debt. Inflation is like a tax on you and me and everybody else. Everybody pays that tax. And that's why things like gold and silver will eventually work higher. There's plenty of groceries out there as long as the plants don't shut down for meat. But the key is keeping the plants operating all the time. I'm a believer that, at the Jackson Hole thing, which wasn't actually in Jackson Hole because, it was virtual, Powell reaffirmed what I told you, that they're going to let inflation run. They're going to keep interest rates lower than for longer. It's clear as bell on the wall. And the only thing that's negative about gold is when you have higher interest rates. So if you're going to be guaranteed lower interest rates, then that looks like a pretty good place to go, because right now our bond yields are so low. Basically, you have no return risk. Why would you want to buy bonds with no return, but you have the risk? You got to be looking for other things. So basically, the Fed is telling us you've got to be looking for other things. So, gold, silver, things that you trade.
Hey, Rich, thanks for being on, buddy. We really appreciate it. I know you're real busy, so we'll have you on again soon. Okay, pal?
All righty. Take care.
You bet. For Rich Anderson. We'll be right back, folks.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and want to thank Rich Anderson for being our guest today. Now, I have posted the I know I posted it. What happened to it? Shut the front door and raise the rent. Let's just do it again just to make sure we get it in here. I posted the chart of corn because it's very important. That's our largest crop in the whole country. And what we've done now, you notice that ABCD pattern that we've just completed, we have now taken out with the overnight trade being up about a nickel in the corn. We hit what is it? Excuse me, I can't even remember the handles on the darn thing. They're jumped around so much. I believe it was around 350. We hit 364 and 3/4. So that takes out the high of July. Now here's where it gets really interesting, folks. You know, we have an expansion now in the soybeans. They've also exploded to the upside. They're trading way above the prices that we had here on Friday, which when they gap up like that, you have to expect it. So we've gapped up above the 78% level. And if you're long the corn and you're long the beans, the way I would handle it is to put your stop at break even. In other words, you don't want them to be unchanged on the day, because with bullish news like that and the market doesn't react to it, you've got to be careful, because people out there are very smart. They've got a lot more information than you on weather and crop distribution and orders. And, you know, Rich spends thousands of dollars to get that information, every month. That's why we have him on here, because he's so informed about what's really going on. So you've got to remember that when those people see something, they can react faster than you, but they can't hide from you. So if the prices start to fail from up in here and you've got big profits, if you ask yourself the question, well, if the news is so bullish, how can it possibly go down? Folks, one of the biggest trades I ever made was exiting a position. This was in 1976. And I was long the beans for about a year and a half, all the way through 75 and 76. And the report came out, and the report was so bullish. I was reading it off Reuters. This was before we had all this really fancy computer stuff. And I was reading it off Reuters, and the Reuters comments about the only soybeans we're going to be able to see this year will be in the Smithsonian. I wish I'd have kept that, but I didn't. And, of course, that was the high in the market. And I remember the day so vividly because I was long and scared to death because I had made some pretty good bucks, and I had a lot of friends and relatives in it. And I said, well, if this stuff gets unchanged on the day, I don't want anything to do with it. So I put my stops on everything at 1 penny under the previous Friday's close, and it was a Monday. And the opening call was 4 limits higher in beans, and corn a couple limits. And then about 2 hours later, Ivan Hour came on, and he said that the beans, there was some selling in the back end. And then just before the market opened, he said, oh, my God, they're not even going to open higher. And oh boy, was that it. They went down the limit, I think, 3 or 4 days in a row. It bankrupted Sparks Green on the way up, but the market dropped well over $3 a bushel from that level, as I recall. And I was out, and I didn't even put a trade on for a month. That was it. I just closed everything out, and we closed the accounts. And I just took it easy, and then in a few months, about 2 months later, I got hired by Drexel Burnham. But that's all I do, folks, is look at those price patterns, and when they're acting pretty good, that's great. And if they're not, then that's what you want to be paying attention to. So the fact that we had these numbers right pretty good. Now we've rallied a little bit. We've rallied about 40 handles here in the NASDAQ so far after that possible 1.618 expansion that we had up here at 12,091. And right now, all we've done so far is rally back to the 50% level here at 12,040. And remember, this could easily get above that because there's so much bullish enthusiasm there that it makes it really, really difficult to decide whether it's going to go up or down, because these markets are incredibly bullish on all of these FANG stocks, and they're calling them the Nifty 80 or the Nifty 8 now or something like that, because they're throwing in Microsoft and Tesla in with the group. So we'll see what's happening. Now let's get back to the natural gas a little bit here. We'll show you where we are this morning on an update, because here we're getting our first sign of a correction here. You'll notice I've got the 3 drive to a top pattern pulling in there, and we got up to the 2.75 level. We were looking at 2.72 as a possible high, and we've dropped about 20 points right now, which is down about $2,000. So with this big reversal like this, what you want to do now is you want to wait, because if that 3 drive pattern is correct, we could get a 38% retracement of this whole move, and that would take you all the way down to 235, down another 17 handles. So let's be patient on this one, because it'll give us another chance. So let's just wait and see. If you happen to have shorted it up there, and being that lucky, then you want to put your stop above the high, which was at 274.90. And let her rip, because it could be a really big one. But the pattern was there. Everything was telling you that there is probably getting ready for a big correction. And that's all we're looking at is in the patterns themselves. So watch it closely. That's all I can say. Let's move on here to this S&P for a second. I wanted to clear up something on that. We were looking for the high to come in at 35.20. We got as high as 35.24, and we've had a pretty good break now. We've dropped 25 handles, which is basically nothing. And remember, 25 handles has been pretty much the only correction that you've had, because when we were at 34.90, we dropped well over 25 handles. I think we dropped 30 handles, and then we had a banner move up to the upside. So you've got to be watching these things, because they have a tendency to really want to run, and you don't want to stand in front of them. And that's what stops are for, folks. If you don't use stops, you might as well write your checks directly into the exchange and save the commission, because they're going to get you. It doesn't, you might miss one or two, but on one of these that you miss, you're in big trouble. And you don't want to get into that. You want to stay away from trouble. Trouble is not a good thing. Okay, one other question someone asked me is about politics, and my answer is yes, there will be an election is my guess, and someone will be elected. I hope that answers that. That's the end of that tune, and let's move on to the next one that I wanted to cover, and that is hold on one second, we get it up here. I want to show you the one that looks the worst of any of these that we have, and not many of them look very bad, but if you had one to take a look at that you wanted to try, I would pick Netflix. And you'll notice we had this big move up on Wednesday, and then the market went up almost to the exact 786 and then backed off. As long as you don't get above that, I don't know where it's trading today, but as long as you don't get above 551, I believe you've got a pretty good chance. Can anybody let me know what Netflix is trading at this morning? Because I don't look at live stocks during the time, but that looks like the best of any of them if it's going to do that. So let's remember. By the way, we're going to have Arch Crawford as our guest on Thursday, and I hope we have Stan Harley coming up on Wednesday. I haven't been able to verify yet, but hopefully we'll be able to have to have him on Wednesday. So I'll be working on that one. And also Bill Cerubi is the one we're going to try to have on Friday. So those are the three that we're trying to have this week. I'll try to verify that as we go through. We got another break coming up here, and then we'll review what we're watching here this morning. Okay, we'll be right back, folks. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a couple of charts in here. One of them is from my good friend over in the UK, and it shows you where we are long term with the channels and standard deviations that are there. We're at the top end of that range. You know, it can easily pop above that if we get above 35.50 or something like that, but that's what we're watching. But the second one is the one that we look at quite often, and that is the New York Stock Exchange Index. And as you can see here, we're in the 23rd week of a rally. And if you go back and look, the last rallies have all lasted 23 weeks. So we ought to pay attention to that this week. At least that's what I would think we do. The most important thing that we've seen so far is the fact that the NASDAQ made almost the exact 1.618 expansion. It missed it by 3 points. And when you're talking about 3 points and something that's trading at 12,000, that's not very much. That's pretty much spot on. So keep an eye on that. Any move above 35.25 in the S&P or above 12,090 in the NASDAQ is bullish, and you just got to stand aside. But we're in an area where we should be ready for a correction, and that's, of course, that we've been that way for 7 weeks. But now we're very, very overbought. So keep an eye on it. Watch if you're going to trade anything and you want to sell anything, sell the weakest, and that's the Russell. Don't mess with the NASDAQ. That's not for the faint of heart. That's the Obi-Wan Kenobi of futures markets, much like pork bellies used to be. So unless you've got deep pockets, stay out of that NASDAQ, because it can really hurt you, as you know, if you've ever tried it. So keep that in mind as we watch some of these things. But I really believe that we're getting pretty close to some type of a move here. Now, also in those grains, make sure you have your stops in here, folks, because if a little bit of rain hits that area or cooler weather comes in, those things will drop like a rock. And we've hit major patterns up in here, taking out the July's highs in the corn and above the 1.618 in the beans. So if they get lower on the day with all that bullish news, that's not a good sign. So keep your stops working in those areas, because you don't want it to reverse on you. And believe me, when they reverse, we know shorts that markets come down faster than they go up. We'll see you all on the flip side tomorrow. Live every day in an attitude of gratitude, and may God bless.